Back with another Savage stream. Thanks everybody for tuning in and seeing what's going on with this Ethereum CRISIS. Little clickbait title there. Yeah, let's talk about some MEV because yeah, it needs to be clarified exactly what it is and how it's going to be used, especially on the miner side, and how ultimately how it affects Ethereum, because that's what is really concerning. So let me see if I got my things set up correctly. See what's up here. I'm looking at the chat. Somebody said that they were first, Jonah Jones, but you were not. I don't know what Snack C is talking about with how long, but how long you're waiting on me? Maybe it was like I was only 1 minute late. I think we're all right. Let me make sure I got everything set up here. We're gonna go through. I got a little slideshow action going on here. Let me see if I can make this work correctly. Trying to use Google Sheets. All right, let's see how that looks. Oh, wait a minute. I already had it on. There we go. All right. This is what we're going to talk about. We are going to talk about MEV and how it affects everybody, actually. Should be pretty fun. I've got hopefully some good information in here, so let's get to it. And something to remember is that, like, I've said this, this is probably my third or fourth MEV video, and the reason I'm doing another one is because in those previous ones, there was some things that I said that might not have been 100% correct, and I don't like that type of thing. I don't like putting out bum information. It wasn't that I was like trying to mislead. It was just a level of knowledge thing. So as I'm diving into this even more, I'm learning a little bit more. Hopefully, I think I've got it on lock, and I think I can understand it enough to explain it. Hopefully, it's not as complicated as it first sounds. But just remember that, like, Ethereum, their initial goal was smart contracts, right? And that's something to remember during all of this, is that their goal is to become, world computer kind of thing, and permissionless world computer where anyone can create a smart contract, so on and so forth. That's kind of like the goal. Then there's been this DeFi push with decentralized finance, where basically all of the things that are out there in the real world and the financial world are going to be brought into Ethereum or on a blockchain environment through smart contracts and all these exchanges and decentralized exchanges and centralized exchanges, and they're all talking to each other and they're all trading, and everybody, and it's just pure chaos, right? And that is basically what's happening now. But we've got to remember that Ethereum is incredibly complex, and there's a high level of complexity of the blockchain itself, how things work. And with these, they call them money Legos, basically, with DeFi's money Legos, that's a risk that is implemented on top of Ethereum, where you can develop all kinds of really cool things, but whenever you do that, you're increasing complexity and the ability for exploitation, right? If there's all these different contracts out there, all these different applications, then anytime you add code to something, you are increasing the potential attack surface, right? For whether it's an exploit of a smart contract or a dApp, these things are inherent inside of a complex blockchain such as Ethereum. All right, so let's talk about some MEV. And it looks like the term MEV is actually evolving a little bit. I like to see that, because originally it was minor extractable value, then it kind of went to maximal extractable value, but to be honest, it's actually a combination of the two. There are two types. You've got the minor extractable value and then maximal extractable value. We're going to talk about each one of these individually so that you can kind of understand the difference, because there is a difference. So minor extractable value is a measure of the profit a miner or validator sequencer, a validator, in the proof of stake can make through their ability to arbitrarily include, exclude, or reorder transactions within the blocks they produce. We're going to get to a slide in a minute where it talks about things that you kind of have to understand before you can really understand MEV. So we're going to talk about this a little bit further. But what is the difference between minor EV and maximal EV? Well, maximal EV is technically, that's what a trader would do, or a trading bot. It's a measure of the profit a trader or a trading bot can make through their analysis of the memory pool and bidding up or down the gas fees to order their transactions as desired for maximum value. I'm going to give you an example in a few slides here of a transaction that would probably be attacked by MEV, a trading bot or a trader. Now, whenever all this first started, before DeFi, you got to remember that someone, a trader that had access to view the memory pool, which everybody does, it's permissionless, it's open source, or not open source, but it's open. So you can look at all the transactions that are waiting in the queue. Okay, maybe I'll bring that up after the little slideshow here. But you can see the transactions in there. So before DeFi, before all this was crazy, there was some level of MEV being done, a maximal extracted value being performed on Ethereum transactions by normal traders. They could look at the memory pool and go, oh, check this out. This is a cool, this is a profitable trade here. I'm going to trade in front of it and then behind it to extract value from that particular trade based on whatever it was, right? And it's super complicated whenever you're talking about decentralized exchanges and all that. But whenever DeFi exploded last summer, it became this area where you needed some automation. You needed these bots to actually go in there and actually analyze. So now there are the trading bots. There's probably not going to be a trader sitting there looking at the mempool anymore and trying to front run or back run other trades that they see in the mempool. Right now, it is probably 100% automated. I don't think that there's any level of human interaction in the mempool and the extracting value from it. I don't believe that exists anymore. Could be wrong, but it just seems like it needs to happen so quickly that a bot is probably going to be the goal here, or the way to exploit it. So some things you need to know before understanding MEV altogether. These are just going to list out some things that you kind of have to realize before and at least partially understand before you can understand MEV. The entity that solves a block first finds a block solution at current difficulty through hashing. So this is basically mining, gets to write that block to the chain. So that's important whenever you're talking about minor extractable value, not so much if you're talking about maximal, which refers to the trading bots and the traders and all that. So minor extractable value is for sure basically a description of this particular bullet point here. Solo miners and mining pools perform this block solving hashing function, which is mining. And so you can see the people that can actually exploit MEV from a miner's perspective would be solo mining, because they are the ones that are solving the block and writing it to the chain, or mining pools. Most everybody on Ethereum are in mining pools. There's some solo miners, but most are actually doing a pool. This is just kind of like a side note. Pools can actually auction transaction inclusion to users off chain, and you'll see this in blocks that pools have won, that they've solved, that they get to write transactions to the blockchain. You'll see where the transaction fees are 0. And if you see that, normally that means that they have accepted a payment off chain, and this is almost like a form of economic abstraction, right? Because they could be being paid in something other than Ethereum, right? And all this is like an auction off chain, and this is really significant in my opinion that this happens, but it does. So just keep that in mind, that there are, we as miners, we don't typically, like I've said before, we fire up our rig, we see, our maximum hash rate, most efficient hash rate, and we are good to go, right? We are not diving into how pools operate, you know, how they operate like from a, hey, if your pool wins a block, then what do you do with that block? How do you actually order the transactions and all that stuff? So this does occur. There are auctions off chain that occur for, and this happens with traders. Traders can coordinate with a pool. There's all kinds of stuff going on in the background, guys. So just keep that in mind. Something else to consider is that it's really not possible to know exactly how much value has been extracted already. There is a baseline, like the bottom line, the bottom bound, I believe is what they call it. Basically like and it's the lower level. So whenever we start talking about the actual maximum value, the maximum amount that has been extracted, there's not really a way to tell that. There's kind of a way to tell the bottom of it, but not the maximum. Most miners and pools are not exploiting MEV yet. Now there's some controversy here. There might be some pools that have implemented it, you know, through third-party sources or outsourced it, right, to actually extract some value from the blocks that they are able to commit to the blockchain that they win, or that they solve and are able to add to the chain. I don't know how much this has gone on in the past. I mean, if you look at the chart for how much extracted value has occurred over the past year, it would seem that maybe they didn't know about it until last summer. But whether or not pools have already done it, I don't know. There's really no telling. Now they're coming out and saying that they're going to implement the capabilities of exploiting MEV. There's a few pools that are doing it, and we talked about that in previous videos on MEV, where it's likely that it's going to be a very competitive market, and you're going to see people jumping from the pools that are more, you know, that are distributing more of the MEV that they get. And again, this is going to also come down to specifically which pools are winning what blocks, right? Because if you have this really gets crazy, because if you start thinking about centralization and all that, if a pool, like right now, if you're a miner and you're looking for a pool, you're looking at how much the pool charges in fees, and then you're also kind of looking at their hash rate and how much they are, how many blocks they're hitting, you know, what their luck is and all that stuff. Okay, great. But now you're going to have this other thing, this other value that you're going to assign to the potential mining pools, where you're going to say, okay, how much are you distributing of the MEV that you're getting? What are you saying your MEV is? And how many blocks are you winning? And, you know, all this kind of goes together to let you decide which pool to actually mine to. And if a pool is hitting a lot of blocks, then obviously they are going to be the one, which is kind of the way it is now. I'm not saying that's going to change a lot, but let's just say that one pool can offer 90% of all the MEV to be distributed to the miners, and another pool that hits a similar amount of blocks only distributes 80% of their MEV. Then, you know, which one are you going to go for, right? Yeah, that's just kind of sidetrack there, but hopefully that makes a little bit of sense. I'm not checking the chat just yet. I will in a minute. I will get totally distracted if I don't. This slideshow's not that long, so just give me a few minutes here. Hopefully the sound and everything is good. Let me look at I'm going to briefly look at the chat just to see. Let's see, what are we doing? All right, nobody's really tagging me except for Pocket Change. Okay, that's good. I guess that sound is good. I don't see anybody screaming about sound or video, so I think we're good. All right, cool. Stay undistracted here. All right. So there are several different types of MEV opportunities. I've kind of talked about a couple of them already, and I kind of broke them down. Non-miner traders are the most common, and basically they are just using bots and the PGA, the priority gas auction types of exploits, bidding up the gas fees or down the gas fees to get their transactions in the desired order to exploit an arbitrage opportunity. Again, I'm going to have a little graphic here that kind of shows you what could happen or what traders do, because I ain't gonna lie, I am not a trader. So if I get some of this stuff wrong, forgive me. Just yell at me in the comments, say, you know, that's not really the way this works. But for the most part, I think I've got this pretty much figured out. So some miners can implement more complex methods. And again, that is because they are the ones that are actually writing the transactions to the blockchain. It gives them this significant advantage over traders. And I want you to really understand that once these pools start implementing MEV and allowing miners to have some say in how this all works, this is going to get insane. All right, this is going to get insane because the miners are the ones that write, and this also goes all the way back to why they want to move to proof of stake and all that stuff. All of that is a driving factor. But just also another note is that MEV can occur in proof of stake as well. So that's not the end all be all solution. Okay. All right. So MEV opportunities exist in the list of unverified pending Ethereum transactions called the memory pool, or also known as the mempool. But technically in Ethereum, it's the transaction queue. But mempool is kind of something that kind of bled over from Bitcoin. Some MEV can only be captured by miners, like I said just a minute ago, but DEX arbitrage is by far the most common right now. Right now, it is the most common, but it is going to get very adversarial between now and the time of proof of stake and the miners. I see a huge fight here, and not like the show of force kind of fight. I just mean that with EIP 1559 burning the base fees, I honestly believe that if the pools do implement this properly, that we, the miners, are actually going to see higher rewards. I'll say that again. I actually think, based on what I've seen, that we are going to experience higher rewards, because the miner tip is essentially which is what is going to be called after EIP 1559. The miner tip is essentially the priority gas auction, the PGA. So whenever you're bidding on where your or whether or not your transaction is included in the next block and all of that stuff, the miner tip is going to replace PGA. So it's almost like they're not changing anything other than burning the base fee to satisfy investors, right? To cause that potential deflation. But anyway, all right. So a few more things we have to know. When vulnerabilities exist in smart contracts, remember that, Ethereum has smart contracts, dApps, and all that. You could literally sit on an Ethereum. You could create your own contract, create your own tokens, and give those tokens a fake value. Okay, and this actually occurred recently in a kind of a, I can't remember the name of the article. I might have to look it up and put it in the description. But it was basically where I think a trader had tricked a pool that was exploiting MEV. I think it was Ethermine, if I remember right. They actually tricked them with a fake token, a fake value. Because again, the bots, as time goes on, the bots are going to get smarter and smarter and smarter, but they're going to have to get really smart in order to outsmart the miners, because the miners are the ones, and whenever I say miners, I mean mining pools in this instance. The mining pools are the ones that write the transactions to the blockchain. So they're going to have to get super smart. They're already really smart, but the bots are going to have to step it up for sure. When vulnerabilities exist in these trading smart contracts, or in liquidity funds, or funds are sent to the wrong address, are at risk, things can get really crazier in the dark forest. I mentioned the dark forest. The dark forest is what they call the memory pool, and this is kind of a cool thing because the dark forest it comes out of a book, and the book, I can't remember who the author was, but the name of the book is The Dark Forest. And essentially, to make a really long story short, is the way that, think of the universe. Okay, so the universe, if there is a smarter, more intelligent life out there, then if they detect a potential threat or another civilization that could be suspect in their history, then the easiest and simplest thing to do is to eliminate it. So basically what they're saying is detection means destruction, okay? And you'll see what I mean whenever you're talking about a transaction. If there's a Ethereum transaction that is detected as being a profitable trade, then it can be attacked. That's basically why they call it the dark forest. All right, little side note there. And you got to remember too that normally the large transactions are targeted due to the risk to reward ratio. You know, they're not really going to target a small transaction, something where you're just sending Ethereum from one user to another. You don't have to worry about that, but you are affected because you are paying higher fees because of MEV. All right. The mempool is a viciously adversarial space that's under constant surveillance and attack. It is a war inside the mempool for how transactions are sorted, arranged, written to the blockchain. Another term that you need to understand is arbitrage, and that is the simultaneous purchase and sale of an asset on different exchanges to exploit tiny differences in their prices. There are a lot of arbitrage bots out there already. They've been around for a really long time in crypto. I can remember hearing about the ones that attacked, not really attacked, but they arbitraged the stable coin. So if a stable coin on one exchange went down by a penny, you know, they could buy it on that exchange and sell it on one that was up by a penny, right? And it's just like a simultaneous trade to profit from the same asset having different values on different exchanges, basically, is the way to look at it. So I'm gonna have an example up here in just a minute, kind of hopefully that will send all this stuff home and make it make sense. The fact that miners have taken this long to even consider exploiting MEV is a testament to their altruistic attitude. Us miners, basically, you know, while at this point there's a lot of, it seems like there's some bad blood between miners and Ethereum. I don't know where it started, but in this most recent debacle with EIP 1559, it really seems like it is coming from the investor slash dev slash Ethereum user community towards miners. I don't know why it's like that, but it just really seems like that's the case. And it's unfortunate because miners historically are altruistic. We are very giving. We spend a huge amount of our time, a huge amount of our capital, you know, our money to buy hardware to support the network and throw hash rate at the projects that we believe in. You know, I'll give you a good example. We our little GPU hosting business that we have here basically mined Conceal CCX for a year straight without any profit. Okay, so for a year straight, we were paying more in electricity than we were gaining at the time in value of CCX. Okay, that is altruistic. That is like, hey, I want to support this project, so I'm going to leave my hash rate on it. Now, some people would say that's really dumb, and you know, depending on your goal, it could be. But some people are very giving, and some people are altruistic. So it's one of those things where, you know, you would have to take it by case basis, whether or not the person is altruistic or not. But hopefully this makes sense, and you're understanding that even though the potential exists that miners, I didn't know about it, but there were miners being mining pools that knew about this vulnerability or this flaw or this capability on the Ethereum network, and they might have been exploiting it for longer than I think. But I can tell you this, that we, the miners, the general mining community, did not know anything about MEV until EIP 1559 became an issue, because it was just vaguely mentioned, briefly mentioned in one of the meetings of opposing EIP 1559. They mentioned MEV, like, hey, you guys still have MEV, don't worry, you're going to be okay, that kind of thing. And we were like, what are you talking about? MEV, what is that? So then all of us started diving into it and trying to understand it. So yeah, anyway. Now, here's some things like this could cause some serious issues within the next year when miners begin actively exploiting MEV, because whenever we, being miners and mining pools, actually start exploiting this on a scale, or at scale, then what do you expect will happen to the transaction fees on Ethereum? If we are causing, if we're competing against bots as mining pools, who we are the ones, mining pools, not miners, but the pools are the ones that write to the chain. All right, so they're the one that solves the blocks. The traders and then the general Ethereum users do not solve blocks. Okay, they do not get to decide what transactions go in what order and all that, but mining pools do. So what do you think is going to happen whenever we're competing with bots that are trying to outbid us for our MEV? Just think about that. All right. So how much MEV are we actually talking about? How much maximal or miner I'm going to call it maximal because there's probably not very much miner extracted at this point. So maximal extracted value are we talking about currently? Well, as of like January, this is probably off into February maybe, it looks like about, and this is the bottom figure, folks. This is the bottom. This is not, it's probably way more than this, basically, right? So $247 million of extracted value. That means that essentially $247 million has been extracted from Ethereum users, right? Hang on, gotta take care of something real quick. All right, never mind. Nemesis got it. All right, cool. Let's see here. So y'all got me distracted here. All right. So yeah, 247 million at this point. Seems like a lot, but it's a lot more than that in reality. So let's look at an example of an arbitrage trading bot MEV potential. Okay, so if this were to happen, then it would alert a bot potentially that could extract value from the trade that they are viewing in the mempool. So there's numerous ways that this is accomplished, but we're going to look at a very simple. Again, there are numerous ways, guys. There's front running, back running. There's miners doing their stuff on their side. There's regular trading. Yeah, it gets super complicated. There's all kinds of different ways of implementing MEV or extracting value from trades, but we're going to take a super simple one. So a day trader spots an arbitrage opportunity where SIL ETH pair has 100% difference, and this does happen. Okay, it sounds crazy, but it does happen. There are these situations on one DEX where the value of ETH or the value of whatever token or coin could potentially be many percentage difference between that and another exchange. So they noticed this SIL ETH pair has 100% difference between Balancer and SushiSwap. I don't know if that's 100% true the way that works, but because SushiSwap is an exchange. But anyway, then submits the following profitable trades. So they see that there's this disparity, this arbitrage opportunity. So they submit a trade that says, okay, I want to swap 16 ETH for 19,000 USDC. They had to get it into USDC first on Balancer. Then swap that 16,000 USDC for 6,000 SIL on SushiSwap. Now, the reason that they're doing this is because they could buy 32, or they could buy 16 ETH on SushiSwap for 6,000 SIL. So finally, you're going to swap that 6,000 SIL for 32 ETH on SushiSwap, and that would net a gain of 16 ETH for that trader. Oh, thanks so much, Rondi. Thanks for the $10 super chat. Let me see if you said anything over here. Yeah, awesome. Thanks so much, man. Thanks for the love, man. All right, so that is an example of the trade. Then what happens is an arbitrage trading bot notices that trade in the mempool and attacks it by submitting the same trade, but upping the gas fees to have the bot transaction occur before the human traders does. And that could cause the human trader transaction to either fail. You guys are crazy. Thanks, Chump Change. Not today, Rondi. Thanks so much. That could cause the human trader transaction to either fail or receive less quantity of the purchased asset due to slippage. And if you know what slippage is, basically slippage is when there's like a price difference between the amount of the original market order, what you intended on paying, and the actual price paid. This occurs, it's completely normal, and it can happen in any trading environment. It's traditional trading. It happens, slippage happens there. I could probably throw up a really quick example of slippage just to show you. Maybe I'll do that at some point, but not today because I don't have it up here. But if you want to know about slippage, let me know. I'm not a trader, but I think I can explain it in a way that makes sense. All right, now that was what you saw down there at the bottom was that actual transaction on Etherscan. So I took that actual transaction from Etherscan. Now let's look at it from a visual perspective. So you got dude sitting here with MetaMask, and in MetaMask he's got 16 ETH, right? So he's sitting there and he sees this trade, or he sees this arbitrage opportunity, and he fires it off. He's like, all right, I'm going to send my 16 ETH to Balancer, and I'm going to swap it for 16 wrapped ETH so that I can trade that for 19,000 USDC. And I'm going to take that 19,000 USDC and I'm going to trade that I'm going to send it to SushiSwap and trade for 6,000 SIL. And then with that 6,000 SIL, I'm going to swap that for 32 ETH because that is the arbitrage opportunity there. All right. So what does that do? Well, that nets this person 32, it nets them 16 additional ETH. So they started with 16 and they end with 32. So as you can see now with the value of Ethereum right now, I mean, that's over, what is that? $45,000. Is that right? Maybe not. I don't know. I'm not going to do the math right. Anyway, it's many thousands of tens of thousands of dollars. Okay, so this is an opportunity that a trading bot would be alerted to. Okay, if they saw this happening, they could exploit it, because all they'll do is they will start the PGA, the priority gas auction, and they will bump that transaction, this same transaction. And the crazy thing here, folks, is that there are ways of doing this without risking without having the original funds. So you can do a flash loan to get the ETH to input in this particular transaction and exercise this trade above this person. So what does that do to this person's transaction? It could invalidate it. It could, because if the liquidity is not there, it could also just create, like, let's say that they put this transaction in with a lot of slippage, then it could pull up their slippage and make their slippage max out, and they would actually end up with less Ethereum than what they intended, right? Or what they expected because of that slippage. You guys are nuts over here. Hey, knock it off. You guys are going crazy. I do appreciate it, though. You guys are awesome. Thanks so much. Hopefully this is making sense, because I'm telling you, whenever we first started talking about MEV, there was a lot of confusion, and there probably still will be, because there are a lot of different ways. Thanks again, Rondi. There are a lot of different ways of exploiting MEV. This is just one very simple way that I'm describing here. Y'all don't get into a bidding war over there. Don't do it. Y'all are good. All right, so there is an MEV dashboard. We'll take a look at it in a minute. That's the URL for it up there. And from there, this is from Flash Boys. They're the ones that designed it. Or Flashbots. Is it Flashbots? Flash Boys, I think. no, Flash Boys is the I forget. I'm not gonna say it. I don't know for sure, but anyway, flashbots.net is the actual URL. To find it, the extracted MEV, we, being Flashbots, look at each Ethereum transaction trace, parse it, and go through the token transfers, do some accounting of the starting balance of the sender address and its ending balance, taking into account proxy addresses and other cases that we plan for with a setup. So basically, they have this dashboard, and we're going to look at it so that you can kind of see where this is headed. We'll look at that in a minute. So what is next for MEV? In general, miners are altruistic in nature, but the MEV cat is out of the bag now. We can't put this back in the bag. We can't put the genie back in the bottle. Okay, now my MEV is something that is out there, and it's going to be exploited by mining pools. Everything. Yeah, it's not good. Miners and mining pool will begin to exploit MEV in what may be an even more profitable way than non-mining traders can because of their direct involvement with writing transactions to the blockchain. Talked about that several times throughout the little presentation here, and hopefully that makes sense because we being mining pools are the ones that write transactions to the blockchain. MEV actually harms users because it is an invisible tax. MEV, users don't really know that it's happening. And this is why in those previous MEV videos I was talking about that this is what people should be really upset about. Really upset about this. Because this is what's causing the high transaction fees, not the base fee. That's not what is the problem. The problem is MEV. And Ethereum's complexity is probably its curse. You've got these little DeFi Lego building blocks, these different contracts, these different exchanges, decentralized exchanges. It's got all the elements. It's got all of the ingredients for this huge exploitable environment, and that is what we are seeing. We are seeing it in real time right now. So MEV could harm Ethereum in the short run and the long run because proof of stake does not fix this. It's still going to be an issue, although miners won't be able to, mining pools won't be able to exploit it because there won't be mining pools. It'll just switch over to validators that can exploit it, since they are the ones writing the transactions to the chain. And MEV is very difficult to mitigate, and it's only going to get worse after EIP 1559. Because, the logic is, or the sentiment is that profitability for mining is going to go down. You guys are crazy. Crazy with the super chats. I do appreciate it though, guys. It's really awesome. Thanks so much. So with the potential decrease in profitability for mining, you're going to see mining pools implement more MEV. It's going to be full-on war between the mining pools MEV and the trading bot MEV. They're going to be fighting for every block, every transaction, every exploitable capability. They are going to be fighting for it. And whenever you hear that, you should know that what that results for users is increased fees, because you have to pay for the use of the network. It's a computer is the way to look at it. There's processing that goes on. There's op codes and all that stuff that has to be processed, and each one has a different value and all that stuff that happens on MEV. So these smart contracts get executed, whether it's a trading bot, whether it's a way to sandwich a transaction between two with two other transactions, a transaction between two transactions with fake value or fake tokens, and get worked over like that, or whatever. It's going to get worse once this starts going down the road of less profitability for miners. So how do we go about mitigating MEV? And this is straight from I'll put the source. I forgot to put the source on here, but this is from a. It's called Paradigm.xyz, and it's a guy that works for Paradigm, and he did a deep dive into Charlie Noyes is his name. He did a neat deep dive into MEV, and that's where some of this information was gathered from. Definitely these bullet points here, but they're gonna have to look at either. Well, let me say this first line here first. When permissionless applications share in platform security uniformly, options are limited. Basically saying that, you know, this Ethereum EVM, this computer, the world computer, is permissionless, and because all the applications share in that security uniformly, then you're pretty much limited with how you can actually mitigate MEV in this instance. So better application design. Potentially, maybe they can design the applications to keep MEV out of it. Additional security incentives. Stable miner revenue streams other than block reward. Now, I do not believe that they mean MEV right there, right? They are talking about other incentives for mining, and that's only up until proof of stake, obviously, but that's just another way, maybe some other revenue stream for miners. I don't know how that would work, but that is something else that they can do. Otherwise, most research is focused on ways to make destabilizing consensus, like time bandit attacks, basically where you have a collusion of mining pools and they mine. Let's say that 3 blocks ago there was a really super profitable trade, and you can have enough of the hash rate to collude, and this is probably one of the risks that BBT was talking about in a way, but you could have the mining pools collude and remine some level of blocks, depending on how many back was the really profitable trade, and actually extract MEV by submitting their own trade into that block and remining, doing the little reorg thing and all that stuff that happens, you know, basically with a normal blockchain environment. But I don't think that that's going to be a solution either. But that's actually an example of time bandit attacks. So the way to get around that would be potentially to separate the inclusion and ordering. So you would have one fee for inclusion, and then have the ordering be like external to the inclusion of the transaction in the block. So you would have to separate that. Right now it's together, it's one thing. Inclusion and ordering is all together. So you'd have to separate that out in order to mitigate some MEV. Finality, that's how long, you know, basically the blockchain has gone on, and how difficult it would be to go back and remine previous blocks. The longer the time that goes on, proof of work, the more finality it has. Like it would be really difficult to go back 1,000 blocks on Ethereum or Bitcoin and remine those blocks and make a longer chain, right? So that's another thing. You got proof of stake. Proof of stake blockchains can slash the validators who attempt to reorg. So this might be kind of a silver lining to proof of stake. There might be ways in proof of stake to help mitigate MEV, at least to some degree, because they are going to be able to slash validators, meaning that they're going to be able to penalize them if they are a bad actor on the blockchain. So, this might be a little feather in the cap of the move to proof of stake. But it says here, however, with enough MEV, the incentive to reorg could still be greater than the slashing penalty, right? If there's enough of that money, if there's enough money to be made, then all things are on the table. So what is next? Well, I put a website here. If you go and check out that website, we'll go to it in a minute once the presentation is over here. BloxRoute.com. They are actually selling the capability of ordering your transactions in an Ethereum block the way you want. They are selling this capability. So that is something that we will take a look at quickly. Ethermine is distributing MEV profits. I believe they're doing this already. That's a pool, mining pool. Flex Pool, another mining pool, is distributing MEV profits as well. I don't remember the actual percentages, but I know that they're both in the 80 to 90% range, something like that. There's also different types of roll-ups that could also help mitigate some level of MEV, where basically look at it as external to the Ethereum, the normal Ethereum blockchain. You're going to have transactions that are rolled up into a single transaction essentially and submitted onto Ethereum as a transaction. Now that could help mitigate, but it depends on what the capabilities are in that roll up, whether or not the transactions are going to be visible, whether or not they are themselves mitigating MEV or not allowing MEV in some way before they get submitted to Ethereum. That's another option, you know, that's something that's coming down the line for Ethereum as well. So here's some resources. I will throw these in the description if I remember. Basically, this is where I got all the information for this little presentation from. All right. So that is the end of that. Whoops. Let's see if I can get out of here. All right. Let's take a look at, we talked about the memory pool. Now this is the Bitcoin memory pool. So what you're looking at here is over here, there are blocks that have not been written to the blocks of transactions that have not been written to the blockchain yet. These are blocks that have already been written. So you can kind of see, if you look at the numbers here, there's 864 transactions here, 13 here, 13 here, 13 here, 13 here, 27 up here. It tells you about how many minutes away. So these are stacking up, right? You don't have just the next block. You have blocks on top of blocks on top of other blocks of transactions that are waiting to be added to the chain based on how much they're paying for the transaction and all that. And this is just to give you an idea of what's happening on a blockchain. But again, this is Bitcoin, not Ethereum. So if you click on like the block, you can see what is going on in there. I thought you could see the actual transaction, but maybe not. This is just my umbrella here. But so that's what a memory pool would look like. Now I had a really good example of a memory pool. I might have grabbed it off of Etherscan possibly, but I looked right before the stream and I couldn't find it, so I just kind of defaulted to this just to show you you know, how this works. There's many blocks of transactions above the current block being worked on and solved. All right, here is this is Etherscan transactions pending. I don't know if it's updated. Yeah. So there are 158,509 pending transactions. So these bots are pinging this. They're looking at profitable trades inside of here and seeing which ones they can front run. And then the mining pools are doing something similar, but see, they have a different goal because their goal is not just to simply front run one of these profitable trades, but also they get to potentially auction off you know, transaction inclusion, transaction ordering, because if they do hit that block, if they solve the block that those transactions exist in, then they're the ones that write it to the chain. So this is like a constant thing that is happening. It's nonstop, all day long, every day, 24 hours a day. It's a freaking war. That's all it is inside of these mempools. This was a good article. I think I pulled some information from here. Dan Robinson, this was really cool because he says this is a horror story. Basically, it describes a way that they... Oh, Rondi, you guys got to stop over there. Oh my gosh, you guys are way too generous. I'm not used to all the love, guys. I'm not used to it. You guys are killing me over here. Thanks so much, man. Okay, you're gonna download and watch the video later. Right on. Yeah, these resources are resources that I'll put into the description. They're really good. This is a pretty cool little story because basically, this person discovered some tokens that were sent to the wrong address. I believe they were, it's like, right here on Wednesday afternoon, someone asked whether it was possible to recover Uniswap liquidity tokens that had been accidentally sent to the pair contract itself. He thought about it for a little while and felt like they would be locked forever. But whenever he looked at the contract, he saw that there's like a burn function, and he was like, holy crap, we could actually extract these coins from that address or from that contract. So in this case, it was only 12 grand worth, and they put together this plan to extract this without being detected, right, by the yes, Flash Boys. I was saying Flash Bots earlier. Without being detected by the Arbitrage bots, okay? But in this case, they failed, because what they did, it's a really good story. I'll put it down there. But what they did didn't work. They actually were alerted. They alerted the bots, and the bot actually front ran this transaction and basically took their funds. Now, what it looked like they were going to do is, this was like a white hat operation where they were going to distribute the funds to the owners proportionally, right? They weren't just trying to steal these funds, okay? They weren't going to just take them. This was a white hat operation. But the cool thing is that there's another article. I think I have it. Let's see here. It won't pull up over here on Brave for some reason. It's rect.news. I don't know why. Maybe it's blocked in some way, but I'll put that in the description as well. And it's actually Return to the Dark Forest, which describes another scenario similar. It goes through the whole thing, but in this case, it was something like $9 million that was locked, and they were trying to extract it. And I think in that case, they were actually successful. So they learned from this scenario here. I think some of the same people were involved in the Return to the Dark Forest. But they learned from this little $12,000 mistake here, and were able to successfully implement it on a $9 million potential. And it's kind of MEV in a way, but this just kind of highlights the problem with the mempool and how it's being attacked and analyzed all the time. Let's see what else I was going to show you over here. Okay, so here is that MEV Explore. This is like a real-time dashboard for how much minor extracted value or maximal extracted value has been performed in the last 24 hours, last 30 days, since January of 2020, 339 million. So even the graphic that I grabbed that I showed you in the slideshow there is actually wrong. I think it's actually more than that now. Yeah, it's over 339 million. So whenever you see something like this, do you think that it just goes up forever? Do you think that this is sustainable? I don't know. It seems like this is alerting. This is concerning. All right. And this is the low numbers. You got to remember that too. This is low numbers. So this is how much money, this is how much value is being extracted from Ethereum users. Essentially, is the easiest way to look at it. So I don't know how much longer this can go on, but it is only going to get worse until proof of stake, and then it might level out, or heck, for all I know, it could get worse. You know, if the financial incentive is there, then even validators are going to take advantage of it. So I'm not 100% sure that is going to be the solution either, you know, proof of stake. So this is just showing that, I believe this was Flexpool. They are implementing MEV. They talked about it in here. Again, I'll try to put all these in the description. And then this is that BloxRoute pricing for basically selling the capability of MEV. So this is what we have to look forward to, guys. It's going to get worse. It's going to get worse. They even sell protection, front-running protection, or like once you put in your transaction, then they want to have protection on that transaction so it doesn't get front-run. Crazy, crazy. All right, good grief, man. That was a heck of a stream. Hopefully, this kind of puts to rest what MEV is. I know I only really covered one specific scenario. There are thousands of ways of implementing or exploiting MEV. I just gave a really quick example. Hopefully it makes sense. I think it should, at this point, at least clear up a little bit of the stuff that was muddy, because again, you know, a lot of us have day jobs. We aren't sitting here looking at the mempool all day or reading articles on exploiting Ethereum or anything like that. So this was a new thing to us. It was probably very well known in the trading world, although I don't know that for sure. Maybe in the bot creation world, it was probably pretty well known that this could be done. But as far as in the mining community, I don't think that a lot of us knew about this. So this was kind of new. This was news to us. So hopefully this clears up a little bit of that confusion. Because I know I was confused at first too, whenever they first mentioned it. And I'm like, I don't even know what you're talking about, dude. So we will see. I agree, Nemesis. I see your comment over there. I agree. I think that MEV is a threat, a real threat to Ethereum, far more than us knuckle dragging miners are. I think it's brutal. It is something that needs to be addressed. It needs to be fixed. I don't think they're going to fix it. I think it's going to get worse. I think that it could be really bad for Ethereum, because if the trading community is basically fighting with the mining community, and that's already started, we've already seen it. I don't want it to be like that. I'm very rational. I think that we all play our particular part, and I don't think that we should be arguing with each other about the significance of our part, you know, except for whenever people say that users are the network. That's not really true, but anyway. All right, so I think we're all we're on the same team. You know, people like to say that we're all on the same team of Ethereum. We're trying to make it better. We're trying to make it more secure. We're trying to do what we're supposed to do on the network. And in this case, the users are going to suffer. And if it gets out with MEV and what is actually happening, if a normal Ethereum user is educated on what is actually happening to their transaction whenever they submit it, potentially, why they're paying so high fees, then, I mean, what do you think could happen to Ethereum if this was really well known in all of the Ethereum community? Because again, us miners, which it was named after us. The thing was named miner extractable value back in 2017. And if we are just now figuring this out, imagine what will happen whenever users find out what's going on. So anyway, all right, guys, I know this is a super long stream. I got 80 viewers. I think that might be a record for me. That's awesome. Do appreciate it. That's 80 viewers on a Tuesday night stream. Okay. All right. Yeah, they're not going to fix it. Tains, I see that. I'm not confident that it can be fixed actually as is. They're going to have to. It's going to take a fundamental change in Ethereum's consensus layer, because that's where the flaw exists, and that's going to be really hard to fix. Really, really hard to fix. All right, I'm gonna go back through the chat. Let me bring something up here so I can just put something on the screen. I'll scroll up and down in the chat, see if you guys are asking any questions or anything. See a little bit of tagging going on, but not a whole lot. That's good. Thanks for telling me the sound was good. Thanks, Rondi, showing some love. Thanks, Chump Change XD, showing some love. Trying to outdo Rondi. Pocket Change XD, awesome. Thanks so much. Rondi got y'all back a little bit, and then the price, the priority gas auction ended at that point. It looks like. So does that mean that no Chump Change XD looks like Chump Change XD won? No, Rondi won. Yeah, Rondi won the auction there. So I don't know. Hopefully all the questions in the chat over there were answered by mods and whatnot. Max Voltage, why are you not a moderator? Now you are. Hopefully y'all answered the questions over there. If not, if you asked a question in chat, then and it wasn't answered, hit me up in the comments and I'll try to answer it. If I know the answer, I will look it up and I will try to figure it out for you. I'll Google it for you. All right, guys, this has been long enough. I don't see anything too pressing over there, so I'm going to end it. I don't want the stream to be too long, although it is already an hour. All right, guys. If you thought that this was entertaining, useful, educational, or whatever in any way, please be sure to like, share, and subscribe. And I will see you guys tomorrow night. Tomorrow's Wednesday. No idea what we'll cover, but I'm sure it'll be something fun, something interesting. I always try to do that. I don't know. I probably should go back to the fundamentals and the basics, but I like doing more in-depth stuff. So, all right, guys. I will see you tomorrow night. Stay savage, everybody.